So this is a new thing that I think I'm allowed to talk about that TrendSpider just released that I think they're going to do videos and stuff about next week. And this is market breadths. If you don't have TrendSpider or Trade Ideas, which we're going to go into next, are my platforms of choice. Trade Ideas is scanning, alerting, and auto trading, which I do a lot of. And TrendSpider is more my advanced charting platform, as well as crypto, which Trade Ideas doesn't have yet. It's being worked on, finally, but they're not quite there yet. Check out the link in the description below. That's an affiliate link, so those, just FYI, it helps me out. TrendSpider has a 7-day free trial, so I'd click on, just go and take the trial. If you like it, great. If you don't, whatever, but it's free. But if you hit other data, and then you can kind of pick what you want. Right now I have earnings, you can do Wall Street bet mentions, there's some stuff here, but they have this new market breadth. And essentially how this works is if you hit on the little, I think they call it a hamburger menu, but just this 3-dot right here, you have a few options. So first is what index do you want market breadth is. I know a lot of people won't know what that is. I'll explain it in 1 second. So you can go based off all these different sectors or industries or use the S&P 500 or whatever you like. And then you can do what has to be triggered. So above or below the 50 MA, above or below the 200 MA. You can also do all of these high and lows when it comes to these kind of things. So what is market breadth? And it's essentially just trying to show you under the market. People will basically call it market internals because say, for example, the market is up. You don't know if the market is up because a handful of names are up. You don't know if the market is up because a lot of names are up. And you don't know if the market is up for any combination of any of those things. So delving deeper into the market becomes very interesting. So you can go, I want to see how many stocks are above or below the 200-day moving average. So you could say, I want to know how many stocks are above and below the 50-day moving average. So what I'm getting from this data is I'm essentially getting, is there any divergence? Same thing that you do with a lot of indicators when, a lot of people will say, okay, if an RSI is oversold, you buy the stock, and if it's overbought, you sell the stock. It doesn't work. It's mathematically proven 1,000 times. However, when it's not doing what it should, then you can get some kind of interesting information. So for example, right here, and then right here, we had the market breadth moving equal. So the same peak here is here where the market was moving higher. So it essentially meant that on this run right here, you had less stocks participating. So less stocks were able to get above their 50-day moving average than they were before. Here, you had what they call deteriorating breadth. At the same time, you had increasing price action. Price was moving higher and higher and higher and higher, but the average stock in the actual S&P 500 was not, right? It was not to the same degree that was happening there. They're going to add in more data. I was talking to the CEO today, actually, on Twitter. They're going to add in some more data here, which will be great. You're going to see me, as part of my process going forward, is taking a look at this. Again, I don't do anything that is not backed up by price action. However, I do think it's cool that I can now go through and look. So, for example, if I'm seeing deteriorating breadth, but I'm seeing the market move higher, that doesn't mean I'm just going to exit a position because of that, because you can see that phenomenon existed for a long period of time here. You had some great moves out of it. However, it might be something to say, okay, it's time to take this as a warning sign. It's time to understand that there might be something going on under the hood. In this case, we know what happened is the mega cap corporations, the Apples and everything in the world were kind of pulling the market up as most stocks were getting hammered. This is why a lot of people have felt like this bear market has been going on for a long period of time when it really hasn't. And that's because this market breadth indicator basically showing you that most stocks weren't participating, right? So some of the other features, again, I'm using the 50 period MA. Again, no magic to any of these MAs. It's simply comparing one or more. So I can just say, for example, 14 period high. You can see that almost no stocks in the S&P 500, one would be all of them are hitting 14 period highs for any length of time here. If we go and we hit the 200 period moving average, and I can look at any individual industry or sector if you want, but same kind of thing we're seeing in the 200 period moving average. It'll be more interesting when more data comes through, but in this case, this was actually pushing lower at the same time price was pushing higher. Interesting to see in a healthy market, quote unquote, you would want to see a lot of stocks rising at the same time that the indices were rising, showing you that under the market, things are looking incredibly healthy, that most things are moving with the market. So I hope that makes sense. So you want to take a look at the XLF. So we'll take a look at the XLF. And then we'll go other data, and let's do, again, as a shorter term trader, I just use the shorter term moving average. So we need to see the finance sector and hit apply. And again, the same kind of thing. You know, if you looked at while this was going on, as this was making new highs, you might go, okay, it's time to just tighten up stops. What's kind of interesting is you've got some kind of flat breath action going on here. And it's not making new lows at the same time that we're making new lows here. So maybe, and this is something that would just be, you know, interesting. If you're watching this video a month ago, did we get a push up in the XLF, right? Have we then got that push up from there? Because if we did, that's interesting. And again, I will be interested to see how this data comes through. So impressed that I actually talked to him about survivorship bias, and he already had a plan for that. So that's going to take them some time. Survivorship bias basically means you don't want to be looking 10 years ago at market breadth using the current S&P 500 stocks, because the stocks within the S&P 500 always change, which could get me onto a rant. I don't think I need to, but it's the rant of people who think that there's such thing as passive investment. There's just not, right? Even the S&P 500 and the QQQs and the IWM and all of this thing, they cycle through quite frequently when it comes to these different things. Keep that in mind.